In today's video, we are going to talk about the Guaranteed Insurability Option Rider, GIO. What does that mean? So this is a rider that can be attached to a whole life insurance policy that guarantees you the ability to purchase additional whole life insurance in the future without any underwriting. Sounds pretty good, right? It is. There's definitely benefits to this rider. However, there are some things we definitely want to be aware of as far as how frequently we can purchase additional policies and the limitations when it comes to the design of those policies. Now, I'm going to, as always, have a laser focus on the cash value because that's what our company does. But when attaching this rider, a lot of times when people ask about it, it's attractive because I know I can get more life insurance down the road. But where someone is not as attractive is when they look at the actual policy. So if I want to exercise that rider, here's a policy and what it looks like. So when I take a new policy out, what you'll find is that it often forces the base premium higher than what one would like based on their total payment. And they kind of look at the cash value and go, ugh, this doesn't look like my first policy or other examples I've seen. Why is that? Well, the reason why is because some insurance companies have limits that actually restrict where we can set the base premium and PUA rider. There's a lot that goes on behind the scenes. So we're going to provide more details on that. But let's get on into it. So we've got our Guaranteed Insurability Option Rider, GIO. Here I've just got Guaranteed Insurability Rider. So what this allows you to do, the advantage to it, is that you can purchase additional life insurance without medical underwriting. Now, limitations exist, one, on the design of those new policies, but then two, as far as the maximum death benefit of those new policies. And we see a relatively broad range here, anywhere from $125,000 to $350,000. Why that range is so wide is because different companies have different limitations here. And we see an age cutoff of age 55. That I should have put a range there as well. What I've seen in the past is a range typically anywhere from 45 to 55. Meaning if we have that rider attached to the policy, we can only exercise it until we hit a certain age. So if we have a cutoff of age 55 and I turn 56, what that means is I can never purchase more life insurance. I won't have the guarantee to get more life insurance without underwriting. I hope that made sense. Let's look at some examples here. So like the last video, we want to talk about the cost, actually attaching that rider. How does it impact the high cash value product? So we talked about the waiver of premium in our last video. Now we've got our Guaranteed Insurability option. A lot of times you'll see individuals request this rider when we are looking at policies for kids. And typically you will see a very low dollar cost. We're going to look at a policy for a 40-year-old male, and the actual dollar cost is going to be a couple $100s. So the question is, how much does it cost? And then what are the benefits? Like, what do you actually get by attaching this? And then once you understand the benefits, both pros and cons, is it something that you want, or you look at it and say, it's not worth having, it's not worth the money. Even if it was free, maybe I wouldn't even want it. So let's take a look here, shall we? What we'll begin with is some literature that provides an overview. Let's take a look. Here we go. So GIO, we see it here on the left. And what it stands for? Guaranteed Insurability Option Rider. So what this allows you to do, so this is an illustration with Guardian. This is on a 40-year-old individual, and what it allows for is a new policy with a face amount up to $350,000 may be purchased without underwriting on each option date. So we're going to get into that option date in a second. Waiver of premium is available if premiums are not being waived on the original policy. So what that means is if your original policy, let's say you've got a $10,000 premium, you're paying that, you're not on waiver, meaning you're not disabled, then you can easily exercise this option if you had it attached initially. If you are disabled and the waiver of premium rider is paying for your existing policy, the first one, then we cannot exercise this rider here, the Guaranteed Insurability option. So we need to be actively funding the policy as one would be if they're not disabled or on waiver of premium. Now, we see 5 option dates here. So what an option date is, it is the date that you can actually convert, or not convert, that you can take out a new policy up to a maximum of $350,000. Some companies will have a lower death benefit amount than $350K. We see that here, it occurs every 3 years and starts at age 43. So what we've got here to provide some information on this is we're starting at age 40. 3 years, I'll be 43, then 46, then 49, then 52, and then 55. So you're starting at age 40. So the first GIO, guaranteed insurability option, that you can exercise would be at age 43. So this first policy, you'll see, has a total death benefit of a little over $3 million. It's about $3.1 million. So what that means, when he is 43, if he wanted another policy, he could exercise this rider and take out a policy with a maximum death benefit of $350,000. And he could do that each time. Every 3 years at age 55, that's the last time we can exercise this rider. So if we're trying to attain more life insurance, it's a nice option to have attached to a policy. If your goal is high cash value, it's kind of a, do I really want to do this? And the reason why is when we're designing that $350,000 death benefit, that policy there, if you've got a policy with $350K in life insurance at age 46, that might give you, let's call it a MEC limit of $30,000. If you wanted to design that policy for maximum cash value, where would we want to set that base premium? Ideally, we'd want to set it at 10%, or as close to the minimum as we get, $3,000. But often what you'll see when we are exercising this rider, the actual whole life death benefit, which impacts the base premium, is higher than where we could set it if we went through full underwriting. In short, a lot of times with most companies, it'll force a higher base premium. Now, we do always need to look at specifics with each company and product, your age. There's a lot that goes into it. But my point is, often it forces a higher base premium. So it results in a case where we attach that rider because we want more high cash value policies in the future with the purpose of maximum cash value. But then when we actually exercise that rider, we see a higher base premium than what we would normally go with, perhaps than what we went with our first policy. And we just say, okay, this is too high. I'm not comfortable with it. I wish I never attached it in the first place. But I know that's a lot of information. In short, we see we can exercise it every 3 years here, or to get back on this point. And here we go. So an option may be exercised early. So what this means, outside of the 3-year window, if the insured gets married, a birth or adoption of a child occurs, maybe it's a grandchild, purchase a home, enrolls a child in college, any major life event will qualify you using this rider, or qualify for an exception of using this rider outside or within that 3-year window. Hope that part made sense, meaning more frequently than every 3 years. So let's take a look at the actual numbers here. So this rider, again, it's not a bad rider, but when we actually look at it and the limitations it provides, a lot of times we don't attach it. It's rare that we see people actually go with it. Base premium, same as the last 2 videos. Then we've got our waiver of premium down here, $380. And then here, GIO, amount $350,000. There's the cost. So very low, for about $130 per year. That gives this 40-year-old individual the opportunity to purchase another $350,000 in life insurance without any medical underwriting at all. That's the advantage. So again, if he's interested in death benefit, potentially it's a good option to have. If he's interested in high cash value, it's a good option to have if we are concerned that our health might not be what it is now, or if something does happen and we can't qualify for life insurance in the future, that's a nice option. But if we're just laser focused on the cash value and we want to design a policy with a minimum premium and such, a lot of times we look at it based on the restrictions that occur with this rider. We don't always attach it. I hope that this was helpful because we don't use this rider a whole lot, but it is a good option to be aware of if we think, hey, I do want more life insurance in the future and I don't want to have to go through underwriting, or I'd like to see exactly what the limitations are. For example, we might look at, if you're 40 years old right now, what does the policy look like if at age 49, say 9 years from now, you decide to exercise one of those GIOs, the $350,000 death benefit, you want to purchase that, a new whole life insurance policy. If you said, okay, if I take that policy out, based on the limitations that the insurance company offers, exactly what would the base premium be, how low would it be, what would the MEC limit be, and what would the cash value look like? Meaning, how much could I max fund it? Would it look good? Would it not look that good? And we can kind of forecast what things might look like in advance. But maybe we look at that, or you just look at it and say, hey, it's not a fit. But my point is, we do want awareness up front. So I do hope that this was helpful. If you enjoyed it, please hit the like button, subscribe for more. And as always, I hope this helps. Thanks so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.